Okay, we've spent a lot of time dealing with depreciation of assets because during their useful life, we consume up the benefit. So depreciation is what account classification? An expense. But when there is depreciation accumulated over time, we have a new account called accumulated depreciation. What account classification is that? A negative asset. So now we're dealing with the fact that we get rid of assets we no longer want. Okay? So this topic is all about the disposal of those non-current assets. The first step to get rid of an asset is to make sure that you have done all the depreciation up to date. That's the first step. Because the aim of the game at the end is to make sure that we work out whether we make a profit or a loss on this asset. And the only way we can work that out is to make sure we know what the expense is associated with that asset. It's recording, so you'll be able to get what it is. Okay, so that's the first thing. So that's basically making sure the depreciation for the asset is up to date on the date of sale. So you may have to do a depreciation balance day adjustment or depreciation expense general journal entry. And those entries are always the same. Debit, depreciation, name the asset, and credit, accumulated depreciation. Good. So that's the first step. Now what we are doing is we are transferring the carrying value. What's the definition of the carrying value? The historical cost minus the accumulated depreciation. So we have to get rid of that to know what the value of the asset unconsumed is left. And where we transfer it to is a new account called a disposal account. So it's all summarised in this disposal account. So the purpose of that entry is to decrease the asset and decrease the accumulated depreciation account because we will no longer have that asset. So if you don't have it, there should be a balance left in there for that asset. So that's what you need to do. Once you've written that, draw yourselves up a general journal, please. So disposal entries, like every other entry we do, the entries are always the same. So first of all, we would debit the disposal account and credit the asset account. They're your first entries. Why would we credit the asset account? We are decreasing the asset value because we no longer have the asset. We debit the disposal account because we're going to summarise the carrying value in there. So that's the first entry. The second set of entries debits the accumulated depreciation of the asset and credits the disposal. So it's exactly the same in terms of decreasing an account because we no longer have it. I haven't put a narration in, but what do you think the narration might be?
The first one or the second one?
They're together. What do you think the narration might be? Yeah, disposal of motor vehicle. What source document would you have? You probably have a memo. You'll see that there might be other source documents associated with these transactions, but at this moment it would be memo. All right, is there any questions about that? So that's what you just need to learn off by heart. And what I used to teach my students, and still do because I'm teaching it to you, DAAD. D-A-A-D. Disposal, asset, accumulated disposal. So it sounds stupid, but you won't forget it. Okay? Disposal, asset, accumulated disposal. You can't go wrong. All right, what I need you to do now is to draw up 3 ledger accounts. One an asset with an opening balance, one with accumulated depreciation with an opening balance, and a disposal account, please. Okay, so the aim of the game is to make sure that you decrease the asset. So in our general journal, we just wrote down, what was the first entry? Debit, disposal of assets. So in our disposal of asset account, on the debit side, 30th of June, because we always use end dates, the cross-reference is asset, and the amount is the historical cost. So if you want to write that down as a reminder for yourself, that number there is the historical cost figure. $30th of June, so the end of the next year, like the end of the next reporting period.
We're doing a year.
I'm just doing it at the end of the year. So you'd have your opening balance. If you want to make the date the 31st of July, I'm happy for you to do so. What's the second entry according to the general journal we just did? Credit. No, debit disposal, credit.
Credit the asset.
Okay, let's just look at your general journal. Debit disposal, credit the asset. So on the asset side, the cross-reference is disposal, and that here of asset, because you named what it's for, and that amount there is also the historical cost. Now it may not bring the asset down to zero, because you might have 5 motor vehicles and you're only selling one. So you might have to balance the account. But if you've only got one of the asset and you do that entry, that T ledger should now have a zero balance in it because you no longer have the asset. Okay, so we've done the first one. So you can see that entry there and that entry there match up. That's the first thing. What's the next thing that is in our general journal? Debit, accumulated depreciation. So accumulated depreciation, the cross-reference has to be disposal of asset, and that is obviously what has accumulated on that asset so far. No, it's the accumulated depreciation balance.
So it's not the carry.
No, and I'm going to show you how to work out the carrying value in a second.
Just technically pretty much utilize that.
Correct. So, we said that we would debit accumulated depreciation and credit disposal, and that's what that entry down there is. So, let's just change the colour so you can see. So that and that entry is the second from our general journal. Correct. So the cross-reference is accumulated depreciation of the asset. So it's always debit disposal, credit the asset, debit accumulated, credit disposal. They are always the entries to record the disposal of an asset. Doesn't matter whether you are selling it or trading it in, those entries don't change. This one, I think it's important that you learn your general journal entries and the ledger accounts, because it's a good one to have in the exam as a ledger account to test your knowledge. Is there any questions so far? All right, let's move on. So the next step is to record the proceeds from sale. So that's when you sell it for cash or when you trade it in. Now your textbook teaches them separately. But I'm just teaching it as one hit because I want the steps to be the same. So it doesn't matter in the exam whether it's a sale for cash or it's a trade-in, you always follow the same steps. Number 1, get rid of the old asset. Number 2, deal with how you got the proceeds from that asset. Always do the same steps and makes life easier. So with the trade-in, you will, with the sale for cash, it's for cash. So what journal would we record that in? The cash receipts journal, because it's a cash transaction. The other way you can get rid of an asset is to trade it in. So you have a vehicle at the moment, you want to buy a new vehicle, you're buying it on credit, and the motor vehicle company says yes and will give you a trade-in for your current vehicle. Those entries, because you are decreasing a liability, because the trade-in means you owe the car company less money, would be recorded in the general journal. So in a SAC or exam situation, the first thing you have to do is say, all right, what did I get for that asset? Did I get cash for it? Cash receipts journal. Did I trade it in? General journal. So what I need you to do now is to draw up a cash receipts journal. And you're only going to do one line and then a general journal. Yep.
What happens if, you trade it in?
Yep. Okay, so in the general journal, in the cash receipts journal, in the details section, disposal of asset, because that's the account it's going to be recorded in. The source document should be a receipt, because it's a receipt of cash. It always has to go in bank. What's the other column it has to go in? Sundries, because it doesn't belong in anything else. So in sundries as well. Okay? So if you sell your asset for cash, cash receipts journal, always disposal, always in sundries. We don't have to deal with GST with these things.
Is it because it's second hand?
Pardon?
Is it because it's second hand?
It's not, look, you do in real life, and there's different rules for different things, but for VC accounting, you don't have to worry about it. Okay, so that's the cash. In the general journal, we have to deal with the fact that we no longer owe the sundry creditor as much for the asset. So therefore, the sundry creditor gets a debit entry. Now the reason that we call them a sundry creditor is the same reason we have sundries. Creditors control is only for creditors that we buy stock from. Are we buying stock in this case? No, we are not. We are buying a non-current asset. So because we're buying a non-current asset on credit, we refer to those people as sundry creditors. We put their name so we know who it is, because you could have more than one sundry creditor. A trade-in is decreasing what you owe them. So that's why that's a debit entry. That's the first step. The credit entry, because we're trying to summarise what's going on in terms of getting rid of this asset, goes into the disposal account. And it goes on the credit side. So by the end of step 2, we've recorded the getting rid of the old asset and you've recorded what you got for the old asset. Does that make sense? Okay, so that's 2 steps down. This is how it goes in the actual, the general ledger. Draw up the ledgers and then I'll explain it to you. I'll just pause it. It's up to you if you want to draw them up again. Alright, we're back recording. Okay, so 2 different examples, but you'll notice there is this 2 entries that are exactly the same in the disposal account because they will always be there. There'll always be an asset entry on the debit side and the accumulated depreciation on the credit side. The reason for those entries, which we did in step 1, is to work out the carrying value. Because as we said it before we started today, the carrying value is historical cost minus the accumulated depreciation. Now, historical cost is what we paid for the asset, the original value, including anything to get it in the location ready for its revenue earning capacity. And we know that the accumulated depreciation is the used up, consumed benefit of that asset. So the difference between the two, the carrying value is the unused benefit, what's left at the end of the asset. Okay, so that summarises what's left at the end of the asset. The entry that we just did tells us what we got for the asset, whether we got it for cash or whether we got it as a trade-in. And that goes on the creditor side of the disposal account. Okay, so by this stage, we should be able to work out whether we made a profit or a loss on disposal. Alright, so that's our next step. Step 3 is to determine if we've made a profit or loss on disposal and to transfer that amount out of the disposal account. That's step 3. So transfer profit or loss on disposal. Now what could happen is that you receive as a proceed from the sale or as a trade-in the exact amount of the unconsumed amount of the asset. And if that's the case, there's no profit or loss. And that means the disposal account will balance off right then and there before anything else. But in reality, because we make an estimate of that depreciation and we don't know what the market is going to say about that non-current asset a little bit later, there's an opportunity for a loss or a profit to be created. So, if the carrying value is greater than the proceeds, you will make a loss. So what the current value, historical cost minus accumulated depreciation is, if that's more than what you got for it, you'll get a loss. Does that make sense? So on the flip side, if you get more for your asset than what the carrying value says it's worth, you'll get a profit on disposal. What journal do you think we will record this transaction, the profit or loss on disposal? General journal, draw one up. Just in time for the yawn. Okay, so if you make a loss on disposal, loss on disposal would be what account classification do you think? It's an expense, okay? Because it's an outflow of benefit. You're not getting anything, you know, it's costing you things. You've consumed something. Expense is increasing. What side do we write on?
Debit.
Debit side. Therefore, to get the disposal account, to a zero balance when there was a loss, I would need to credit the account.
Disposal asset, is that an asset account?
The disposal asset is like a profit and loss summary account. It's a summary account that has both sides of the equation in there. So if that's the entries for a loss on disposal, what do you think the entries are for a profit on disposal?
Debit for disposal of asset.
Yep.
Credit like profit on disposal.
Bingo. Bingo. Can't go wrong. B-I-N-G-O. What account classification would profit on disposal be? Revenue. Bless you. So we've got you sneezing, we've got you yawning, we've got you talking. You're famous. Alright, so that's how we record it. How it looks in the ledger, all you need to do, and you can add this to the one you had before, the disposal of asset account. First of all, let's deal with if it was a loss. The entries, if it was a loss, were debit disposal, credit loss on disposal. So that's the entries that match up there. So draw your disposal account and your loss on disposal account. You can use your one from before with the bank. I think that's probably easier.
We don't have a loss of disposal.
No, you don't. You need to draw the loss on disposal, but you do have a disposal account. Okay. By this stage, with a loss on disposal recorded, this account now should equal the same on both sides. Because we've got rid of the asset, we've accounted for the proceeds from the sale of that asset, and we've accounted for the fact there was a loss on disposal. So by that stage, that account should have a zero balance in there. Both sides should equal the same, hence the totaling off. Loss on disposal, you told me, was an expense account. So what would we do with that at the end of the reporting period? Close it to profit and loss summary, just like we do any other expense account. Okay, the other option is that you made a profit on disposal. If you make a profit on disposal in a disposal of asset account, it gets a debit entry. So in the disposal account, when there's a profit on disposal, either draw yourself up a new account or add to it. There's a profit on disposal. And in the profit and disposal account, it gets a credit entry because it's a revenue account increasing. So same as before, by the end of the process, if there was a profit on disposal made, both sides will still equal the same. We will now have a profit on disposal. And how do I close that account? Where do I close profit on disposal to? Profit and loss summary. All over, regrow over.
So it'll go back to disposal asset account.
Correct. Because this account, the purpose of this account is to summarise everything to do with this asset on disposal, including what it was originally valued at, what depreciation had accumulated on it, what we got for it, and whether there was a profit or loss on disposal.
That one's just for cash.
That's an example for cash. So the other one, if that said sundry creditor, same thing. Alright, is there any questions there? Right, one last thing I want to cover today.
How many lines?
2.
Okay. Wow.
Just where you report this information. Reporting the loss on disposal. Where would you report the loss on disposal? It's an expense. So it's going to go in the income statement. Where? As a other expense. Why? It's after the sale. It's not related to the selling of stock. So it's an expense of the business, but it's not part of what it does for its business. Profit gets reported under other revenue. Same reason. It's not a sale of stock. It's not our main core business. So it goes as other revenue. The other one thing that I'll just add in here is the proceeds from sale. If they were cash, what accounting report would be put in? Statement of cash flows under first time that we've actually put it into an example. We did statement of cash flows in year 11. We've got 3 choices: operating, investing, or financing. It's investing. It's finally an example of an inflow from investing. Yes, your lives are complete. Fist pump the air.
Success.
Success. Alright, I'm going to finish the notes here today because you've done really well, and we'll get the extra under over depreciation next lesson.
The loss on disposal, is that like reduction in invoice? Does that reduce your invoice because you're not using it?